Hi, this is Dr. Camarda once again with my thoughts on why I personally think that value investing, Warren Buffett style, buying really good quality for cheap prices, will crush it, why value stocks will crush it going forward. It may seem contradictory that I believe A, U.S. stocks are overvalued and headed for a correction, and B, value stocks are a good buy. But these positions are really just two sides of the same coin. Value investors like Warren Buffett and others of his ilk, including me, though of course I don't compare myself even in the same time zone as Warren Buffett, but we believe it's best to buy stocks when they are trading at a discount to a diligent assessment of the value of the company. Many, if not most, U.S. stocks are the opposite of this and trading for probably more than they are worth. Not less. Still, some good deals are lurking out there if you know where to look. And this is how Camarda approaches stocks. We are value investors. We look to buy good quality cheap and then sell when a normal value relationship is restored. When value has been out of favor for a decade or more, as it has been in the past recent 10 years, the following period, value stocks tend to do extremely well. Value stocks have outperformed growth stocks during most of these 10-year periods. I'd say probably a factor of 5 or 6 to 1. In unusual times when the value underperforms, like in the 1930s, right before the dot-com crash in the late 90s, and now the subsequent periods for value stock outperformance have been substantial. Big percentage the outperformance over growth stocks for many decades, for long periods of time. It's really a remarkable phenomenon. And if you look in a newsletter and Wealth Advisor, you can see some nice graphs that we put in there for you that illustrate this point. But as you can see there, or hear me now, value did much better most of the time and actually did better by some huge percentages. We think that's actually great news in the current period because the recent underperformance of value investing likely indicates that value will just crush it going forward. Again, looking at these periods, we see, as mentioned, we see 1937, the few underperformance periods where value did worse, like recently, were followed by long, significant periods of value outperformance. If history repeats itself, as it often does, this should bring many smiles to many Camarda investors for a long time. Hopefully you found that productive and useful. And again, I apologize for lack of a teleprompter and my somewhat less than perfect healthy condition. But thanks so much for watching. Until next time, this is Dr. Jeff Camarda. Bye-bye.